The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon or good morning to everybody. We're going to get started here in just a minute. We're making sure that everybody who registered is getting signed on so we don't miss anything. We're going to run through today's presentation with our crew from Universal Commercial Capital pretty quickly. So give us just a moment and we'll get started. Thanks for joining us. Okay, we're going to go ahead and get started. Looks like we're starting to see some of the registration logins slow down. Anybody else can continue logging in. We'll just miss my beautiful intro. So once again, thanks for joining us today. The Universal Commercial Capital is going to talk about the commercial loan fundamentals and what lenders look for. Our presenter today is going to be Ivy Baca, and she's been so much fun to work with Eric Tran and the whole crew over there. So Ivy, if you're ready, we're just going to go ahead and hand it on over for you. You can get started and tell everybody what they need to know.
Thank you, Chrissy, for the introduction. Thank you, everyone, for joining us today. Yes, my name is Ivy Baca. I work for Universal Commercial Capital. Okay, so let's start with the first. Okay, Chrissy, it seems like I need your help here. I can't move into the next page.
I can't even see the little arrow buttons. You want to give it another shot? I think I just got one. I don't know if I did that or you did.
I believe you did that. Okay, well, thank you. So we're going to discuss commercial real estate. When we talk about commercial real estate, we're talking about income-producing property, which is an investment property. For hard money commercial and stated income program, the property is the only means of recovery in the event of loan default, which means lenders will look at property location, property conditions, and cash flow. The property types to fall under this category for commercial will be retail, malls, shopping centers, office buildings, hotels, 2 to 4 units, condos, and multifamily. Now, one thing that is a big no for our lenders is odd property, which are more likely to be what we call it, and not a very good location, standalone buildings, and third or fourth tier cities. I think I'm going to need your help again with the button, Chrissy. Thank you. For hard money commercial, while traditional banks will look deeply more into the borrower's background, private lenders will only consider the property to make final decision. This means private investors and lenders will not look into the borrower's FICO. They will not review tax returns or W-2s. For the stated income program, the only difference is that they do require a minimum FICO of 650 in order to get qualified. On repayment schedules. For hard money, investors will have the term of 1 year to 5-year term. It really depends on what the borrower is looking for and how fast he thinks he will be able to pay off the loan. For stated income program, we do have a 3-year, 5-year, and a 7-year fixed rate, which is amortized over 30 years. Now, that really also depends on how fast the borrower can make the payment of the full amount. Another thing that lenders and private investors will look into is the LTV. Borrowers with lower LTV are a lot easier to qualify with a lower rate because they have more equity in the property, which equals, of course, less risk in the eyes of the lender. For hard money, our LTV can go up to 70% depending on what type of transaction we're looking at. If we're looking at refinance or we're looking at purchase, then the LTV can vary. And of course, the 3 main criteria that we discussed at the beginning, which will be the property location, the property conditions, and the cash flow. For stated income program, we can go up to 80% LTV. Now, again, the 3 criteria will be looked up into as well: property location, conditions, and cash flow.
Ready?
Yes.
Okay.
Thank you. And the big word here for commercial real estate loans is the DCR, which is the debt service coverage ratio. This is very tricky, though, because sometimes some private lenders and some lenders will not even look at the debt service coverage ratio. They only look when the loan amounts are from 700 plus. If it's lower than that, they really don't pay too much attention to it because there's LTV that is the main point that is reviewed at the beginning or at the scenario. Okay, but for example, a property with 140,000 in NOI and 100,000 in annual mortgage debt service would have a DCR of 1.4, right? So the ratio helps the lender determine the maximum loan amount or the size based on the cash flow generated by the property. Now, if there's a vacancy over 30%, definitely the DCR is not going to be enough to support the loan amount. This is where we want, or the lender will look more at the vacancy ratio. So we don't want to look, lenders and private investors will not want to look at vacant properties. They want to see that there's cash flow, there's rental income coming in, and if the loan amount is over 700,000, of course.
Ready?
Yes. Okay, with interest rates and fees, this is a big thing for borrowers because their interest rates and fees really depend on how they're going to structure their loan. Interest rates on commercial loans are generally higher than residential loans, and also commercial loans are usually involve fees that add up on the overall cost of the loan, including appraisal, legal loan application, loan origination, and survey fees. Some costs may be upfront before the loan is approved or rejected, and a loan may have a one-time loan origination fee, which is what brokers charge, which is a 1% or 2%. The fees can vary. But in hard money, there's no upfront fees. The only thing that will be requested in case there is um, in case there's a questionable about the value of the property, then the appraisal will be needed, but that's the only fee that will be paid up front. For stated income program, of course, sometimes lenders do require a deposit, which will be used for the appraisal, or which will be used for any type of expenses. And it can be reimbursed, or it can be calculated at closing. Next, Chrissy. Thank you. The prepayment penalty. This is very important for some borrowers because when they're trying to pay their loan before the time is due, they want no prepay. So for hard money, we do have, or some private investors, some private lenders, they do have a minimum prepayment penalty, which is 6 months. Some of them have 0 prepayment. It really depends on the loan scenario, and that can vary for hard money and prepay for between 6 months to 1 year prepayment. And for stated income, though, it's a little bit different because it really depends on the term of the loan. It could be either, for example, I had a few scenarios myself where a first stated income program, where it's a 3-year fixed program, then they have a 3-year prepay. Now, this is negotiable. This is something that we can work with the borrower in our case, and we can buy down the prepay. Okay, there's buy down options for prepay for the borrowers if they're looking to have the loan pay off before the time is due. Okay, so next, Chrissy.
Gotcha.
So we have talked about main criteria the lenders will look for when it comes to a scenario that is brought up to them. Location is very important, and the property conditions and the cash flow it's the main things that they look into. But also the LTV and DSCR and the rate, term, and prepayment penalty. I just want you guys to know if you guys have any more questions in regards to this, if you have a scenario that you want to discuss with us. We're very promptly in Universal Commercial Capital. Once you come up with a scenario, just give us numbers, random numbers up in the air. If you have a purchase or a refinance, a rate and term transaction, we're able to tell you if it's going to be doable or if it's not, based on the location of the property. Location is very important for investors and lenders. Besides the value and the equity on the property. Okay, so I think that's the bottom line when evaluating commercial real estate loans. Lenders consider the loan collateral, the creditworthiness of the borrower, including financial statements such as loan to value, which we discussed, and the debt service coverage ratio, which we have also discussed. So if you guys have any questions, please go ahead and let me know.
For anybody who wants to ask questions, you can type them in the question box of your GoToWebinar toolbar. I did have one that got submitted via email rather than live today because they weren't able to attend. And their question had more to do with if you had any suggestions about basic steps in due diligence.
Basic steps, due diligence will be just like I said, you have to look at the location of the property. You have to look at LTV, loan to values. What is the value of the property? A value of the property is very important as well, because sometimes we can come in with either higher value or lower value, and when we are close to the end of closing the loan, we get the appraisal back. We're talking about stated income right now. When we go to the end of the process and the appraised value comes back, the comps do not support the loan amount. So that's where sometimes the borrower gets a little itchy about it because he thinks that the value of his property is worth a lot more, and it comes for less, and then the loan amount is definitely lower. So again, I would suggest to look more into comps of the property value, the location of the property, and property conditions as well. For private commercial real estate, we do have a lot of our private investors that look into location, but not only that, but they look into personal financial statements to see if there is any other assets. They look into conditions of the property, cash flow. If the property has a lot of units, then they have to be all rented. The occupancy of the property has to be at least 90% occupied. So yes, those will be the basic things, basically.
Okay, we had a few people send some questions live. We had some that jumped on a little bit later, so they want to talk about, I guess, kind of do a review about how you mentioned the terms and the rates. And then it's kind of a two-part question, but also if you had approximate closing time frame.
For hard money, the approximate time frame could be between 2 weeks to 3 weeks. I would say 2 weeks, and it could be even less. It really depends on how fast the borrower can provide us all conditions in. Hard money, it's very fast, it's very easy because we have only one person that makes the final decision, which is the private investor. So it could take 2 weeks, the latest. And for stated income program, that's a little more difficult because they do require to have an appraisal done on the property, and the appraisal can take between 10 to 14 business days. So that could make the loan, the closing time a little more deeply into like 30 to 45 days, I would say.
Okay. Keith is asking if you have a small balance commercial mortgage product, and then if you have any minimum.
Our minimum loan amount for commercial would be 100K. Actually, it's in all of our loans. For private or stated income, we have it at a minimum of 100K. And it could go up to however much you want.
Okay. And Darren's asking if you only lend in first position.
For hard money, we lent only, for hard money, we lent first and second position. Now, in second position, we only lend as long as the first is not as big. And for a stated income program, we only lend on first position. So for example, on hard money, if we have a value at 2 million and we're looking at a loan amount, they have an existing lien of 500,000, then we can lend another maybe 600 or 700,000 or 500,000, or make it even to the first lien, but we cannot exceed the 65% overall, 65% LTV.
Okay. And then Rita's asking if you can just verify whether or not you are just direct lenders or if you're also brokering.
Well, we are direct lenders for all of our hard money deals. We have our own pool of investors that we work directly with. For stated income program, yes, we do work as correspondents, and we work with various lenders that we have a long-term relationship with. But don't be afraid that there will be a lot more fees involved, because that's the major issue that some other brokers have when we work as brokers. Our fees are minimum. It could range from 0.5 point to 1 point for stated income.
Okay, great. And then somebody's asking if you can do a quick review about the debt servicing. Let me reread this. Can you overview how to debt service the building that you talked about on the call earlier?
Okay, if we can go back to the debt service coverage ratio PowerPoint, maybe they missed that. Please, Chrissy. There you go.
There we go, that one.
Okay. So for debt service coverage ratio, I'm going to mention this again. It really depends on it really depends on the loan amount. If we're talking about loan amounts less than 700,000, where not much is in stake, then private lenders and even lenders from other companies won't even look at debt service coverage ratio. But when the loan amount is more than, yes, they want to see that the occupancy on every unit is occupied. It's a 90% occupied. There's not a lot of vacancy, or as I said here, vacancy. When vacancy is over 30%, then the DCR will not be enough to support the loan amount. Now, if we read here, commercial lenders also look at debt service coverage ratio, which compares property annual net operating income to its annual mortgage debt service. Now, whatever is coming in, okay, we're talking about rent roll. We're talking about operating statement will be calculated. That will be rental income. That will be property taxes and insurance, any utilities, any maintenance, all of that will be calculated and divided by the annual net of, the debt service coverage, which is how much you're going to have to pay off at the end of the year. So, for example, a property with 140,000 of annual net operating income, okay, that's all calculated into one, and 100,000 in annual mortgage debt service would have a DCR of 1.4. If we have a 1.4, that at 1.4, we can say the borrower will have enough to pay off his loan. He will have enough, and he will have even a little more for himself. So he will have enough to pay off the loan. Now, our minimum DCR here, it will be at 1.2, because at 1.2, he's got enough, and if he's got other assets, he can survive with other assets, right? But he has enough to pay off the loan amount. But we're talking about when we say 1.4, he would have a little bit more, and not more than enough to pay off the loan amount. So that's why some lenders will say our minimum DCR is a 1.2 or 1.25.
Okay. Was somebody asking if you also consider doing residential hard money loans?
Yes, we do. Again, we do hard money loans for all residentials or even commercials. It could be a single family residence, but they all have to be investments, investment properties.
Okay. And then what do you consider tier 3, tier 4 cities that are not good locations for them?
I would say it really can vary. When there's places that rural areas, there's not enough populations, there's not it's not a zone commercial area, it's more of a residential places that is very hard it's very away from the city, for example.
Okay. And then Keith is asking, do you have a list of approved property types, like maybe auto dealers, daycares, etc.?
I don't have a list of property types, but we look at everything. We look at, as I mentioned, the property types. We look at retail stores, we look at condos, we look at warehouses, we look at automotive. We even do hotels. We look at every type of property. It just really depends, again, on the location of the property and the conditions the property is at currently. We even do rehab with hard money. So if borrowers are looking into fix and flip, we can look at those. We have different programs. So if you'd like to discuss more about it, feel free to contact me. My email, I think, is at the end of this PowerPoint. And you can either contact me. I'm always available. Text me or text Eric at the same time. Yeah, We're here. We're here to help in any kind of way, and we're very promptly at answering all your questions. We're able to tell you straightforward if it's something that we can help you with or if it's not. We can't tell you, oh, let me see tomorrow, or because we work directly with our investors. So our investors, we are able to pick up the phone and be like, hey, do you like this property? And it's located here and there, and they will respond right, you know what? This is something that I can definitely lend on, or this is something that we don't. Or we can just off glance, because we know who we work with, we're able to tell you, oh yes, this is something we can do, or this is definitely something we can't because the value is not there, or because the property is in a bad area, and different things like that. So since we work directly with investors for a long period of time now, we've been in the business for 20 years and we have a very long-term relationship with them, we can say, we can think like how they think. So we're able to answer very promptly.
Perfect. And it looks like you're getting some interest from brokers because they're wondering if you would be willing to talk about the points that you would offer if they were to work with you.
Oh, of course, of course. Now, in regards to the fees in our office, sometimes we include our broker's fees into ours. So when you go back to your client or to your borrower with a letter of intent, he's not afraid, or he doesn't get scared of you showing, hey, you got universal commercial capital fee, you got broker fee, and he doesn't scare to see a lot of fees on the LOI. So your fees can be included in ours, and we pay you at closing, of course.
Perfect. And then, are you funding opportunity zones?
I'm sorry?
They want to. Darren is asking if you are funding opportunity zones.
If I'm funding opportunities?
Opportunity zones?
Oh, of course, yes. Again, email me, call me, we can discuss.
Okay. And then, can you indicate hard money loan interest range for residential and commercial?
Yes. For first TDs in our hard money program, our rates, again, can vary depending on the LTV, okay? But our rates can start between 8.5 to, first TD, of course, 8.5 to 11%. Now, on second TD, unfortunately, our rate is steady at 12%. Now, if we're talking about a lower than 50% LTV for a second trust deed, then of course the rate is negotiable. We can look into lowering it to 11%. The more likely are over 12%.
Okay, perfect. And then, are you lending nationwide? And this kind of has two parts, so I'm just going to ask the first part first. This is a big one.
We do lend nationwide. Our expertise right now on hard money are only on the west side of the nation. We're lending Washington State, California, Nevada. We do lend on those for hard money. And for nationwide, we go with stated income. For stated income, we do it anywhere.
Okay. And the second part of that is, do you lend in mortgage states that require lengthy judicial foreclosures instead of the faster non-judicial foreclosures through deeds of trust?
Unfortunately, for like I said, for hard money, those are the big niche where we have foreclosures and we have BKs and we have investors that are able to approve them right away. But that's only in the state of California, Washington, and Nevada right now. And for stated income, they will not accept those. So I would say no for those at the moment.
Okay. And then somebody's asking if you can talk a little bit about your rates and points.
Yes. The rates, again, for hard money, as I said, it really depends on the LTV. We can work from 8.5 to 12%. on first and second TD. And for stated income, it really depends on FICO. If you have a minimum FICO 650, rates can start at 9%. And on points, I can tell you right now, our points are from half a point to 1 point. We don't go over or 1 point unless we're talking about only 100,000 or 200,000 loan amount. But for loan amounts over that, over 300,000, our rates can be 1%.
Great. Do you have any specific programs for brokers?
Yes. Well, just join our team. We have a broker's package that I can send over to whoever would like to request that from me. And the W-9, that's the only thing. We don't commit with you to have you with the strict with the I would say a more formal way, because all of our brokers that come to us are like friends. They know who we are, and we have a very long-term relationship with them as well, because they know that our fees and everything can be negotiable, and there's no broker package needed, basically. So, but if you want a more formal way into working with us, yes, we do provide a broker's package.
Perfect. And I've got a 3-part question coming up. You ready?
Okay.
How do we submit a loan scenario with you?
Okay.
Will you accept an executive summary and a general application? Then, once we submit, how quickly can you get back with us?
Okay, let me tell you, for most of our deals, when I work with brokers and I already know what they're looking for, a scenario will be more than enough. A scenario with a complete address, property address, loan amount, if it's a refi or a cash out or a purchase, that will have to be included. And what LTV are they looking for? What is the estimated value on the property? And just as reference, I would like to know the borrower's FICO. For hard money, as I said, it's not needed. We don't need it. But just in case I can give you another option, I would like to have it. And I can get back to you with no documentation at all, because we really don't look at it unless you're sending me a property that has more than 3-4 units, and I have to look at and calculate the DCR, and I have to see if there's income coming in, and I have to look at personal financial statements. As I mentioned to you, when the loan amount is over than 700,000, yes, I would like to see more about the deal. But if it's just a scenario where I need to tell you, okay, this is something we can do, or we cannot, or this is, yeah, the borrower will qualify. Yeah, a brief scenario with all the things I just mentioned will be enough.
I'm just going to put something in here real quick as I'm watching. This has been one of the most engaged audiences I've ever had on a webinar. I mean, probably ever. So I'm really impressed with everybody, and I'm just so happy to see this. I'm typing away and making sure all the questions get answered. But great job, everybody. That's fantastic. So my next one here is, oh, do you buy loans?
Oh, no, we do not buy loans. No.
And then I've got somebody who says that she's not a broker, but she's a realtor. Can she still send clients to you?
Of course, of course. And we have worked with realtors, and yeah, you W-9 is more than enough. And if you want to work directly with me and your borrower as the middleman, yes, of course, send it over, and yes.
This is so great. So I think we'll probably have time for maybe one more that's going to come in here, and then we'll make sure everybody can get back to their day, and we'll do all of our follow-ups afterwards for everybody who's asking for extra information. Oh, do you sell the mortgage notes? Do you sell mortgage notes? May not buy, but are you selling?
No, we don't buy and we don't sell, unfortunately. We are very professional with our brokers. Brokers come in directly with their loan scenario, and if we're not able to work with them, then of course they're free to take their loan somewhere else. But we do not sell or buy loans, no.
Okay. And then just to close up, some people have asked for a copy of the PowerPoint. Will you be sending that up? Are you planning on sending the PowerPoint with your follow-up today?
Yes, it's also going to be posted on our website. It's going to be posted in our social media, Facebook, and I believe LinkedIn as well. You can find us on Facebook as Universal Commercial Capital, and you can also find us on LinkedIn as Universal Commercial Capital. You can find me on LinkedIn as well. So there's Ivy Baca with Universal Commercial Capital. And I have my own Facebook account for Universal Commercial Capital. You can find it there as well. And you can email me and we can send you a copy.
Perfect. And you know what? I can vouch for Ivy, everybody. They are very responsive and get back to you and very professional. And it's always a pleasure to get to work with the whole team over there. They do a fantastic job. So I think that's it for today. If you guys have any other questions that you want to ask, you can feel free to email AAPL or Ivy directly. We'll make sure that those questions get answered for you. And as always, we appreciate your time. We know everybody's busy and we've got lots of things going on. And so we appreciate that you give some of that time to us to go through these things to help the private lending industry do better. Ivy, great job today. Thanks for hanging in there and getting us started through all those technical issues up front.
Oh, I'm so sorry. Yes. Well, thank you, Chrissy, for all your help. And thank you, everyone, for joining today. And I look forward to speaking to some of you and look forward to your calls as well.
All right, everybody, have a good day. See you next time.
Okay. Bye.